All right. Good morning, everybody. More hurry up and wait. So if you liked yesterday's choppy, sideways, nasty mess, then you'll love today. There's always a possibility that the market throws a fit and we break out or break down out of the zone or the range, but it will take news to do that. So the base case for today is sideways. Maybe range, it's possible, but more likely sideways. And there is a difference between those two. UK up about 0.5%, small caps down about 0.5%. Hong Kong is still closed. They'll be closed until October 8th. So if you're trading any of those China ADRs, Baba, Baidu, JD, Neo, Lee, any of those, just expect lowered volume, maybe smaller gaps in the overnight than you're used to. They may fade back a bit after that big run that they had because China's closed. It's on holiday for the entire week. It has been, right? I think Monday it was open, and then the rest of the week it's been closed, and it won't open again until Tuesday. So, understanding why a market is moving in a particular way kind of helps us deal with our P&L a little bit. So as you can see, it's mostly jobs. Then we're going to get some factory orders, and we still have Fed chipping their teeth. If you look at the projections, it's supposed to be minimal in its difference between the previous and the consensus estimates. It's not much here. Everybody was pricing in that Fed cut, expecting that the job numbers were going downhill fast and that the Fed was going to be more anxious and willing to provide those cuts. This is going against that thesis. It's making them unwind all those cuts they had already priced in, and that continues to impact everything. Yesterday, the flows were just really divergent between the S&P and the NASDAQ, for an example. And I don't expect that to change today, but news would change that, right? If we can get a highly correlated market, it's really dangerous market. It's when everything syncs up, and I mean everything. That's when we run the alpha protocols. It's when we see some of the biggest moves in the market. It's one time framing, single direction push, but it's going to take news to do it. So if we don't get the news, then we're not going to get the push. As discussed, when it comes to crude, the run up is not expected to last. So, expect these kind of moves on the way back down again. And if you look at the things that are up versus the things that are down, it's not anything that's going to move the market, right? It's not, this isn't what we need. We need something better, up or down. So we got a little bit of move in US dollar Japan after hitting into that 141 area. And we got the dollar getting close to 102. The 2-year, it got into 3.6 the other day, but kind of backed off of it, 3.65. Just sitting and waiting. I think the range right now for the S&P and the NASDAQ is that Tuesday midpoint. So you can just run your fibs from Tuesday's high to Tuesday's low. And you can catch that mid. Same thing with the ES. It lines up pretty close with a moving average that's was up there. So it's dropped down here now. But to even get there, we got to get through the 10-day moving average because we're underneath it in the S&P and the NASDAQ both. So this is expected to be the range, the lower half of Tuesday. Even if we do expand above it, we're not expected to get outside of Tuesday's high. We're all waiting on this data for tomorrow's job numbers. It's been jobs week. We've been getting jobs data all week. But the biggest one is going to be tomorrow. So we're still in hurry up and wait mode. 90,000 on the volume. It looks good, but it was just a bounce on the 20-period moving average in the overnight hours. Got back up through the ADR half. We're back above the VWAP, messing with the volatility trigger. This is what spot gamma refers to as the danger zone, dropping down below the volatility trigger, because in their mind, there's really nothing else to help us until you get to the put wall. That's 54.50, huh? That tickles. So we don't want to see those kind of moves, right? I mean, if you're day trading it, great. I'll take those kind of moves. But if you're trying to swing trade things, the S&P falling from 57 to 54 would move the needle in everything. And I don't think a lot of people are positioned that way. So let's not do that. Whether or not today is going to be a range day or a sideways day is going to depend on their reactions on the edges. Looking back, a lot of times you can't tell if it was range or sideways because it's how the flows came in and how the market moved away from those edges that tells us whether or not it's a sideways day or a range day. So we don't know which one of those it's going to be, but a lot of times you can kind of get the hint by the amount of volume if you bring it up on a volume profile, which we'll get to that in a minute. We are already at the ADR low. It's the half, but it's still the ADR low. So a common concept that we have is if we get to one ADR level early enough in the day, we can go to the other ADR by the end of the day. I know it doesn't seem to make sense if you're newer to trading and you're looking for some why behind it. I wouldn't struggle too hard with the why. It wouldn't take much to give us that bump back in the other direction and get us up here. It's a round number, 5,800. But to get there, we have to get through the cog line, 57.92. We have a cog line down here, 57.32, which kind of helped out with that low. It's Tuesday's low. Got a lot of structure at that level. We overshot it on Wednesday. We overshot it last night. There is the consideration of liquidity, and that every time we test this low, we are removing more and more liquidity. If they defend this and we can get through Wednesday's high, we've still got to get through this point here, which is really close to that half back that we had marked out. Got to get through this zone, and there's expected to be a lot of liquidity there. We can't even get there. We tried it yesterday, and they took a front run on it, hammered it back down. So even if we can get through this liquidity, we've still got that liquidity. Still going to be an issue. With all of these things overhead, we can still say if we get to the ADR early enough, there is a possibility that we go to the other side. Now you can lay that out level by level. We've got our own Globex to measure. We're at that half back now. If we can get through the half back, we can challenge our own Globex high, yesterday's high, and then this peak. That would get us up into the 1,236, where we would readjust everything and then focus on 5,800. Level by level, right? Central pivot range. The week's pivot is up here, 57.87. So that would be another level that we would have to fight with if we do attempt to make that move higher. We don't have an MDP because we've already crossed through the daily pivot. We hit that pivot yesterday, by the way. It's one of the things that we rejected off of on that run up. The central pivot for today is lower than yesterday's. The width is about the same. This is implying that if we break out, it won't grow legs, it won't stick. We'll come back in, very much like we did yesterday. We broke out into the liquidity from Tuesday, and that was about the best trade of the day right there. So if we break out today and it's not news related, it's very likely we're just going to come right back inside the box. These are profiles on the week, the current week, previous weeks. We have discussed this low for a while now, and the idea that we had this air pocket here. The consideration was that if we broke the low of structure from last week, we would fall through this box and end up around 5,700. And yet we keep bouncing on something. Now there's a lot of somethings down here that we could say that we're bouncing on. And if you look around, you'll find plenty of things. What we didn't have was anything from the volume profile, right? There was no structure here. And if you look, we're not building up any real structure here at this point. The point of control is still over our head. We're not seeing any icebergs down here. We're not seeing large positioning show up. So it's what we're hitting isn't previous volume or any previous structure. Not in that sense. It's more pivots and inverse and correlated markets. Does highlight the fact, though, that on a run back up, 5760 is our current week's point of control. It's going to be hard to get through that level and keep it. And then even when we do, we've still got the point of control from the previous week to deal with. It's just all that mess that's overhead and a lot of air pockets below. They're not hedging, so the numbers that we get today isn't concerning them. It's very likely that we're going to see hedging tomorrow because that's the big one. $10-day, 30-minute volume profile. This point of control is not expected to move anytime soon. We haven't built up any new volume anywhere else. And the way this works is for every new candle we get on the right, we lose a candle from the left. That makes sense, right? There's only X amount of candles here. We'll just say it's 400 candles. There's always going to be X amount of candles. So when we get a new one here, we will lose one here. So eventually we're going to start losing all of these candles. And that means we will lose all of this volume. And it will find some other place to move this profile. Right now, that would be higher. It would be up in this zone, which was built by these candles. So we would see the point of control move up even more. The only thing that's going to change that is if we can build out some volume down here greater than the volume that's up here. And we're working on it, but we're just not seeing that big volume come in yet. No VPOC today. We ran through the point of control at the open into Globex last night. So if we were going to carry it forward, it's already been hit. As I've mentioned before, the textbooks will tell you, you can bring these levels across into today's price. I don't. I've already got enough pivots. But if you feel that you're lacking some, you want some more, those are valid levels to bring into today. You can see we had a lot of volume at the open. It didn't hold. We started to break down with structure. We've got a gap, a liquidity gap here. That was a decent play. Slow grind back up and then sudden all at once. You know, the different markets open. So we got a little bit of assistance on that. But other than that liquidity grab or liquidity gap, we're just right back where we were. Holding the range and having now built a solid range for the day. This is today's trading range, the expected trading range. unless or until we get news that gets us outside of it. That is what you should expect. All things considered, that's a relatively tight range. So the way megaphones are built is that we define a range like this, and then we start to press the edges. We expand to the downside and we come back in, and that gives us a lower pivot. And then we expand higher, that gives us a higher pivot. And then the next time we go up there, we go a little higher again, a little lower, and we start to build out a bit of a megaphone shape. We've already got the downside doing that from this low to that low. So if we were looking for an expansion, we would be looking for an upside here because we came up a little short. That does lean into the idea of hitting the upper ADR today, which makes sense because we've already hit the lower one. And if you hit the lower one early enough in the day, you can go to the upper one by the end of the day. That would develop more of this megaphone shape and test more of that liquidity across this halfback zone. So it makes sense to me. It still doesn't say that we're going to get to 58 and then 58.11 cog line and then 58.22. I don't really see any of that on the table unless we get news today that kicks this market into gear and says, forget the jobs data tomorrow. We're going to do things today anyways. So it's going to need to be some pretty decent data. If the S&P and the NASDAQ are sideways waiting on data, then 80% of the marketplace is going to be sideways waiting on data. We already talked about the KWeb China group. They're on holiday. That covers emerging markets and FXI, the whole little spectrum. Take those out, you got precious metals down and gold miners, silver, all down. Mag 7 is down a little, but they're not down enough to meet our benchmark. The VIX is up with Bitcoin, and really that's all we've got on the other side. Uranium, crude, uranium, Bitcoin, and that's all we got. So a market on hold, waiting on data that's coming out tomorrow. Not even, I mean, we're going to get some of it today, but the big data that everybody's waiting on is tomorrow. So short and sweet. Today, it's very simple. We got to get out of the range with gusto. It would be fantastic flows. You wouldn't be able to miss it. 95 to 97 names in the S&P 100, NASDAQ 100, everything all driving in a single direction. It would be shock and awe kind of news that would do it. And without that, I don't see us breaking the range and going anywhere. Everybody be careful, be safe, watch the clock. We'll see y'all tomorrow.